angle, no time to delay. Markets rise and markets fall. Atomcash is ready to answer the call, while the bulls charge hard and the bears dig deep. The angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows, where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. You're watching the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Adam Cash, and I'm bringing you the firepower your financial life may have been missing. Now, whether you're new to trading or a trading savant, I am to turn complexity into clarity with a shot of adrenaline. And today we've got a very, very interesting day. We made a new all-time high yesterday. We're making another new all-time high in the pre-market. I, believe it or not, am sick, and I'm trying to do my best, so I'm going to try to keep the energy up for you guys, keep you all hyped, and keep you informed of what's going on in the market today. So excuse me if I hit peaks and valleys, but we're going to try to keep the energy as high as we can for the short amount of time that I'm with you this morning, and I appreciate you spending the time with me this morning. Good morning to Hatchet in the chat. Eddie hitting the year before Toby this morning. We have our regular crew popping by. Appreciate you guys. Hope you guys are having a great day thus far. Like I alluded to in that little intro there, market is at a new all-time high right now. We actually had Tesla delivery numbers come through in the pre-market, got just shy of all-time high there, a few bucks short, and now coming down. Delivery numbers are pretty good, so you're going to see a little bit of reaction here. Obviously, Tesla being in play today. So we'll keep an eye on this today, as it will be a key part in how the day really will shape out. On top of that, NVIDIA right now hit another high at 190.23 ever since we broke that 183.30 level that we spoke about on the daily chart on this program. It's just been pushing up since then, right now at a new all-time high in pre-market as well. So we're going to keep a tight eye on that as we head through the day. Now, as it pertains to your Catalyst Watch for the rest of the week, surprise, the government shut down, and what that means is we're not getting any labor data. So this can be a good or a bad thing, depending on what side of the fence you're on. But as it stands for right now, labor data this morning is not happening, so no data there. And someone can correct me if I'm wrong in the chat, but I'm like 99% sure we're not getting data either for non-farm payroll either. So during this government shutdown, or at least in the time that we have this shutdown, data that's not mandatory to keep the government running, like labor statistics, is not going to be released. The other kinds of data that we won't see, so yes, I am correct, non-farm payroll. I just double checked my notes. We're not going to see jobless claims, non-farm payroll, CPI or PPI, retail sales, housing data, factory orders, and other like employment trends. All that data, whoop, out the window. So if you're me, I'm kind of seeing that as it stands right now as a more of a bull catalyst than a bear catalyst in the near term, simply because, if anything, the economy, in my opinion, is not leaning more bullish. It's actually leaning more bearish on the economy, or I guess hawkish, whatever terminology you want to use. The economy isn't looking that great, so obviously that can can influence the market. Now, the other the other side of the argument is, if the economy is looking poor, then the market or the Fed may have to cut rates, which could be bullish for the market. So there is an argument both ways, but either way, the way that I'm looking at it is, if that data is removed from the equation, then there is no longer a bull or a bear catalyst. There's just no catalyst. So the market will resume its course, and in this case, the course is up, unless you've been under a rock. So we're going to keep an eye out for that. Now, we did see some very interesting volatility come through the exchange yesterday. A lot of, I'm assuming they're hedges on volatility coming through yesterday, and volatility overall has been actually sitting kind of comfy in this. Here, I'll move to the daily chart here. Comfy around 16, which is a little more elevated than it likes to be. If you're a bull, you want to see it like floating around like low 15s to the 14s, and we're sitting near 16. What this spells to me is, if this does mark up above 16.37 in the 16.53 area, that volatility can move into expansion. Now, that doesn't necessarily mean the market is going to be bearish, but that does mean that, again, those spreads on those XPX contracts get wider, which tends to support more of a bear theory than a bull theory. The other thing that I noticed yesterday was we did see a pretty clean divergence. Here, we'll go to the 5-minute chart so you guys can see. On SPY, so SPY basically grinded up all day. In fact, I got calls right at market open yesterday. Went up, I think I closed them at 100-something%. And I put a stop loss on. I got stopped out on the bottom of this candle by like a few pennies on my entry, and then proceeded to rally all day. So I was a little salty on that. I had 664 calls, so that would have been really nice. But hey, made money, can't complain. But the reason why I'm saying this, look at the Qs yesterday, you look at the SPY yesterday, and look at IWM. Yes, still up and to the right, but more bearish throughout the day. And I made a little tweet about this, or a post about it on X, saying that even though the market was very bullish, SPY was hitting new all-time highs and stuff, it seems as if and I guess I want to use the word the breadth, the underbelly of the market, a lot of names were red or seeing some bearishness, and even if they did grind back up, a lot of them gapped down, which is very interesting for me to see. So this could indicate that there is two different kinds of behavior going on. One, there's some risk off behavior occurring. This would be a supported thesis with how the VIX, the volatility index, is sitting, and how a lot of these other names are pulling back a little bit. And some of that money is rotating into like your big tech, like Nvidia. The other thesis I have is that money may be rotating back into your Mag 7 names or your large tech names in general, mainly due to the fact that they're almost seen as like a safe haven here. Maybe not Nvidia. Nvidia is more of like a growth name, right? But like your Apple big money accounts, sitting on a lot of money. Apple is relatively safe, but you're still getting some growth out of these Mag 7 names. So even though a lot of these Mag 7 names are at higher evaluations, you're getting some growth. They're stable businesses that make money right now, that have some money in the bank. So we could see some more inflow into the Qs, and conversely more outflow of IWM. Now, what does this mean, and why I'm saying this? Well, if the VIX continues to trot to the upside, and we do see this rhetoric take place, where we see the VIX kind of, the IWM kind of somewhere we're going to get a little bit of a pullback. Now, that doesn't mean I'm not going to take advantage of this move. It's just how I'm structuring my trades, right? Maybe me personally, I'm not putting all of my money in the market. I have some cash on the sideline. I'm more heavy in equity than I am like swing options right now, because my equity can get stopped out. I'm not going to have as big of a loss overnight, but that doesn't remove me from making gains on the market as we continue higher. That way, if the market does get a retracement, does pull lower, anything does happen, we do get a correction short term, I can then get in without having as big of a loss, theoretically, compared to a options trade, where it could have a deeper loss versus a an equity trade that might have 1 or 2%, I can get back in lower and make a lot more money, have a lot more upside, and more of a long-term growth trajectory. So that's kind of where my head's been at with the market lately. So it's cautiously bullish. As a day trader, you want to still lean on the side of a bull trade unless you're targeting a specific area. For example, for me yesterday, I had my first loss of the week. It's been a fantastic week. I've made up all of my transgressions from last week and then some. But I had one loss last week where I took a short around what I'm calling the super devil's number of 666.66, where it's an area of support resistance there and 666.32. There's an area of like decent resistance there. Open up a put position there. Slight misstep on my part where if it was a 1 DTE, I would have made money, but it was a 0 DTE, and we kind of chopped along, so I got faded out on my trade a little bit. So it is what it is. But the point of what I'm trying to make is I waited for that specific level to tap to then take a bear trade where the risk reward made a lot of sense, that if there was a pullback, if there was a pull down, I'd make some money pretty quickly. So that's kind of the logic there. Good morning, EB in the chat. Guys, we got about 3 minutes here before we get going, and excuse me if you catch me taking a few breaks here and there. Like I said, my voice is really hoarse. I don't know if you guys can hear it, but I'm trying to push as much air and volume into my voice as I can, so I'm going to be continuously drinking throughout the show. So if you're listening and you're not watching, if you just hear me randomly pause, it's because I'm taking a drink. But also, the show is not sponsored by Polar, but I'm going to get a Polar sponsorship one day. You were all here to hear it first. But if you haven't already, guys, do me a quick favor. I ask you guys twice per stream. But if you do it now, I would appreciate it. Interact with the stream however you can. If you haven't already, say good morning in the chat. I'd like to say good morning to you guys, interact with you throughout the show. So feel free, jump in the chat, especially if you're over on YouTube. If you haven't already, like the stream, whether you're on X, YouTube, Instagram, Kick, or Twitch. And if you haven't, pop over to that YouTube channel, hit the subscribe button. Once we hit 500 subscribers, this will be an everyday show. So if you enjoy the show and you want to see more of it, pop on over to YouTube, hit that subscribe button. It takes you 2 seconds and costs you $0.00. Thank you very much for your support of the show. All right, guys, we got about 1 minute until we see the market open. Want to touch on Crocs because I've been long on this name now. We're going to touch on Crocs. We're going to touch on Grab. Now, full transparency, I did stop out of my Grab equity. And I did realize some of my Grab leaps the other day. I don't know if I mentioned on the program, but I realized some on, I believe it was 922, somewhere in this general area of around like 650-ish. But I did get stopped out of my Grab equity yesterday because I said it needed to hold this 591 area. So now I'm just kind of waiting. Might get back in, but this is just on watch now. So I'm no longer long Grab at the moment. But there will be a time where I more than likely will get back in. So this one's set up still. I'm just not exposed at the moment. We'll touch on open again real quick. It's just kind of consolidating around the 814. Nothing too crazy there. And we spoke about Target on the program, which I like. So we'll pop on over to Target, if I can find it somewhere in here. Target. Now we saw that little buyout news. I don't know if I was live or not, but I think I tweeted about it or posted about it. Target now has some buyout rumors. So we spoke about on this program on how the chain is basically set up for a gamma squeeze between now and October. Each week, that chain ramps with more and more OI, going up to 90, 90 being the big threshold to break. So once Target breaks 90, it should be a pretty explosive move to the upside, or at least very short term. I also want to highlight how you got this basically a real technical level of importance there on Target, just shy of 90, where you have this red star on the daily. You got the 21 EMA currently sitting at 90.21, and this next LOI at 90.97. So getting over those 3 levels here. So essentially, if you want to keep it real simple for yourself, getting over 91 will push a lot in favor of Target on the bull side of things. Okay, market is now open, so we're going to get into it. If I can get out of here and back to my, I won't say playlist. Watch list. All right, getting a little bit of a dump here on the open. Let's see how this goes. Q's getting a little bit of a dump here, and IWM a little shaky out the gate. Nothing too much to report here outside of what we talked about. NVIDIA getting a nice push, hard push on the open. New all-time high on NVIDIA, broke over pre-market highs already. We'll see how long that lasts, but that was a real quick pop there. Went, yeah, about $1 in a minute, real quick. Now rejecting. Watch this pre-market high here. So you did make a new all-time high in the session. Watch this pre-market high of 190.23. I wouldn't be shorting this. I'm just saying watch it. If you're a bull, you need to see some level of strength above that 190.23 for a continuation to the upside here on NVIDIA. Apple. Not a lot of strength or weakness out of the gate. Kind of flat for your first 1-2 candles here. Meta, I wanted to talk about Meta. Yesterday I shorted Meta, made a few shekels on Meta. It's the first name of your Mag 7 that is looking like it's actually pushing pretty bearish. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 out of the last 12 candles have been red on the daily. So I'd look for some level of a little bit of a bounce here, especially coming off this volume shelf, coming back up shy of like 743. You may want to consider a swing put to fill this gap here left from 731, or perhaps like a put debit spread or a call credit spread if we get up there. So that's actually something I'm keeping a tight eye on to take advantage of if we get up there, depending on how the overall market looks, of course. Check in on our canary in the coal mine, Google, and it's looking like we're sitting right on the 8 EMA here. You broke the green side of the downside, so expect some period of consolidation here. As long as the bears don't follow through, this will revert back to the upside and continue the bullish trend here. Your MACD's flipping red a little bit. RSI is sinking down just a tad, so like I said, some period of consolidation here. As long as the bears don't break the 21 EMA, you're more than likely going to continue to revert to the upside on Google and push higher. If the bears do break the 21 EMA, I look for a break of yesterday's lows for confirmation. If yesterday's lows do break, and I'm saying on the daily between now and the end of the week, you more than likely will sweep lower, probably not to fill the gap, but to test the gap at around like 220. So that would be pretty, you lose about 20 bucks here. I'm sorry, 224. You lose about 20 bucks here on Google if that happens. So keep an eye on that. And Tesla. Spoke about that in the pre-market. Had so those delivery numbers come in pretty solid. Big pop here in the pre-market. You're going to want to watch that pre-market high if you are a bull on Tesla. And obviously your all-time highs on Tesla at 488.54. Those are your two areas you're going to keep on watch on Tesla today if you are a bull. If you're already exposed long, that's what you want to keep an eye on. This has got hot, and it's got a good catalyst to keep it sustained, I should say, at this level. Maybe not necessarily continue to push. I would watch out for a sell the news kind of narrative today, potentially on Tesla. If it does sink lower than this pre-market low, or I shouldn't really say the pre-market low, but this low prior to the data, then you might want to be a little bit more careful if you're a bull. So not really bullish or bearish on Tesla up here. I mean, it's hard to say. It's clearly a bull move and continuing to rally, so I'm not going to say that. But at this point, I'm just speaking in sense of people who are opening new positions or maybe looking to open new positions. You may want to be a little risk off in both ways. The opportunity here either way is shaky. I could see the bulls continuing to rally it, and I could see the bears getting a little chunk out of the good news today to push to the downside. So I wouldn't have exposure on Tesla either way, me personally today. But that's just my 2 cents. Going back to the market, near the pre-market high around the 670.50 area right now. At the Qs, moving to the downside, and IWM is also moving to that. So this is interesting to see. We are seeing IWM at the lows, and Qs are making new lows on the day. I assume that's NVIDIA? No. Who is... Microsoft's pushing to the upside. Okay, so you got some Apple weakness here. A little Meta weakness, Google weakness, and some Tesla weakness. And Amazon. Oh, Amazon's ugly. Remember, bearish under 221 on Amazon. That's all you need to know on the daily chart. It can reverse out of here. It's got to get some strength. And look, now the POC is right here. That POC on the daily chart, 222.55. I would not be a bull on Amazon until you wait for that break with some volume. Now, if it breaks with that volume, you might get a nice little push, and that would be the time to take advantage of it. But if it doesn't break, I would not be long Amazon in this environment. I think it needs to draw lower. If you did want to be a bull, your window of opportunity is going to be between basically 210.88 and 214.61. So you're 200 MA in this old gap, the high of the gap. But I would wait to assess what price looks like at that point in time. You do have a lot of confluence just above that gap with the 50 MA on the weekly and the 200 MA on the daily. So some confluence there. I wouldn't rush it if you love Amazon or you want to open a new long on Amazon because you're seeing it down a little bit. I definitely wouldn't rush into a brand new position on Amazon here. Excuse me for a second, guys. All right, I think I fixed one of these things on my feed here. So shout out to Omar subscribing to the YouTube channel. Thank you, Omar. Now I'm starting to see them come through. So if you subscribed or if you haven't subscribed, subscribe now. I'll give you a shout out because I think I fixed it. So Omar, if you want to say, hey, what's up in the chat? If you did just subscribe, confirm with me because it says you subscribed. So what's up, Omar? Thanks for thanks for subscribing. And shout out to all you guys who are here mostly every day. I appreciate you guys as well. Not to give love to one and not to the others, right? Market pretty choppy. I did want to double check. I don't think we have much going on today. You have Fed Logan at 10:30, and that's it. You got Goolsby to speak on Fox Biz at 2:30 today. But outside of that, no real news. The big news for tomorrow was non-farm payroll. So unless the government is not bankrupt, not shut down tonight, and they can put together the data for tomorrow, then we're not getting non-farm tomorrow, which kind of sucks. Just non-farm's a decent catalyst I like to play, put some volatility in the market, etc. So we'll see. Let's check on the VIX real quick as we kind of just chop sideways here. VIX 16. All right, so you definitely want to be careful here. Market is kind of choppy out the gate here. Qs are showing some level of retracement or weakness here, and IWM is kind of choppy. We might see a divergence where IWM actually picks up the reins today while the Qs get some pullback. Microsoft's pretty strong, though. And NVIDIA's volatile, but trotting, I want to say, to the upside. Apple, a bit weak here out the gate. Meta's weak on the daily chart. Like I said, it needs another push up here before it's a short again. But Meta's weak on the daily chart. Google pretty weak. And this is what I was warning of with Tesla. That good news turns to bad movement for the stock. Still the news kind of move it. We broke the pre-market low, and now you're getting a bit of a sell-off here. Watch for momentum to build here with more volume. I bet you're more than likely going to backtest this 465-ish area before pushing lower. In fact, I'll put my money where my mouth is. I'll look at the 460 puts for Tesla. I'm that guy. I'll put them up on the watch list. Correct Tesla up. All right, Tesla. So if we back test basically this low, 464.73, that's going to be my trigger. Again, depending how technicals look, how volume looks, to long the 460 puts on Tesla for this week. Especially if we interact with the AEMA right there, which is basically exactly where the AEMA is right now. That'd be a nice time to short. Those contracts probably going to be about $5 at that point in time. 520-ish. So that's kind of like where I'm targeting here. It is Tesla though, so I don't necessarily want to rush in either. But even the high of this candle, which is just a few shekels shy of that low, right around here. I'm going to wait a second. The contracts are around 520, so that's my buy point. All right, I'm going to upside here before going lower is very possible. Upside here before going lower is very possible, but I don't really want to overstay my welcome on a short on Tesla, especially with how much momentum it has. But we're playing a very key area here. I'll even put a here. We'll put a line on the chart. This is the cut point right there. I'll make it red. Make it red, and a big red line. There you go. That's the cut point. So no matter what the price is, I will cut if it goes above that line. That's my risk. But if you missed your trim opportunity, here it is again. You got about 13% here on Tesla. So far, what I like on the last two 1-minute candles here, we're respecting the AEMA, using as resistance here. Building some volume down here at the lows. If you haven't taken a trim yet, definitely consider one. If the lows break with volume, though, we are going to leg down pretty good, in my opinion. All right, near the lows again, definitely want to trim some here. All right, trimming out some here. Trimming again. Trimming again. And again. Okay, now I'm going to go runners here. All right, it's runners 33%. Bada bing, bada boom. I will... Let me stop loss it at probably like 620. Let's stop loss it at, I'm going to stop loss at 590. There you go. Nice and easy. 30% gain. Should leg down some more. Here, let's hit the air horn. Oh, that sounds kind of lame. I don't love that air horn. All right, gonna trim quarter runners here. Actually, I'm gonna trim half runners here. That's 522. Ooh, I filled for a higher. Times like this, I would use a market order because we're favoring the volatility to the downside. So I would use a market order to get out in this environment, in this particular move. Some cash, even if you just watched. Hopefully you learned something that you may be able to apply to your trading as well. What's up, Ooh, I don't want to butcher your name, but thanks for saying hello. If you want to spell your name phonetically in the chat, I'll remember if you want to hang out. I'm going to try, and you tell me if I'm right. Sahim? What's up, Sahim? Did I say it right? What's up, brother? Is that great? I think. Might be right. You tell me. $532. Give me a second, guys. I'm just updating my trade log, which you should do. Keep a trade log. Make sure you keep and hold yourself responsible because it's easy to go through your transactions and be like, oh, I made money this week. I lost money. But it's better to write down and see what you did because that way when you have a good win, you have a good loss. Good loss. You have a loss, you can go back and see you know, the errors of your ways, so to speak. So always, always, always keep a trade log. Ooh, I gotta check on something real quick. Nice. So yesterday I opened a coin long. Let's check in on coin. Woohoo! Up 6% on the coin. I opened up a very far out the money spread with a 9-to-1 risk to return, risk to rewards scenario. So it's gonna be a pain to close out. The daily trigger on coin, so if you guys have any interest in trading coin, was 351.89. We gapped above that and now pushing here on coins, up 6% from my entry. That was not on the program. That was for our members in exclusive trading. But also longed Wolf yesterday. That's up 5% from my entry. 10B, we talked about 10B on this program. Got back in on 10B. That's now up 2% from my entry. And these are the things I was talking about. Oh, Crocs up 2, baby. Let's go. These are the kind of things I was talking about, guys, where you want to be cautiously bullish. You could stay bullish in this environment. Expose yourself to good risk to reward trades or those equity trades that have solid stops, solid risk to reward. We could still take on a little risk, but even if it turns against you, you're more than likely going to get stopped out versus like an options trade where you wake up and you're down 60%. I can work both ways. You wake up and you're up 70%. But you know, you want to at least manage that, especially in this environment. Be realistic with yourself. This is what I'm getting at. I'm going to see if I can get a fill on this. I'll wait. We'll see. I'll come back to that later. Hopefully it cools off. Anyone catch the Tesla trade? I'm seeing like zero, no hype, no reaction, nothing in the chat. Anyone? Anyone? Bueller? Anyone catch a good little trade there? Make a little money? Do a little dance? Anything? Hopefully you did. We'll go back to the market now and check in and see how things are pushing. Look at Crocs. Crocs up right now. 1.85% up at 86.57. Daily chart pushing at the 50 MA here. Looking solid from my entry and even from that video I uploaded on my YouTube channel. Still looking solid. Breaking over this 50 MA. Should give it a nice little push to this 89.92 area. My second price target here. We're still in this big earnings gap as well. I put out the tweet on X and I said this is going to go to 100 sooner than later. Might fall a little short of that. We'll see. I'm calling for the 200 MA tap at least. Right now that's literally at 99.38. So pretty damn close. So hopefully we get that tap there to the upside. Those Tesla contracts now have lost $300 from my close. That's why you don't want to look at gift horse in the mouth, especially as a bear. Look at that little reversal. Where did I close out? Right down here. I might have missed a little bit, left a little bit on the table, but weren't greedy. Just took the volatility of the downside. Boom. What a beaut. Hatchet said YouTube glitched right when you were talking about entering Tesla. Damn. I'm sorry, guys. One thing, so a little background on what's happening in the real life world and why I can't have a set streaming schedule just yet is I'm working on a very complex move, essentially. So once I'm moved, I should have better internet where I move to. Because unfortunately, there's like 1 or 2 providers where I live currently, and we're moving to a more densely populated area, which will have some fiber optic, and I'll be that. So I am long volatility right now. Nvidia selling off pretty starkly from that new all-time high at 191.05, breaking that pre-market high. And you can see once we broke beneath that pre-market high, so you fought with it all morning. You got this big, thick candlestick right through it, and then we're just traded lower from there. So now you're going to want to see if Nvidia, here's zoom out to the 5-minute here. Look at yesterday's high. So that's this candle right here. 188.14, so about only 50 cents or so lower. You're going to want to see if you get a reaction there, which we've already got pretty close to on this 5-minute candle here at 9:45. So it's possible we go a tad lower, but wait for a reaction there if you are interested in being a bull on Nvidia today. I personally wouldn't take Nvidia either which way today unless you're trading very, like I guess it's almost a scalping, like intraday moves, kind of like what we did with Tesla. It was a quick trade, a few minutes there. But I wouldn't hunt for trends today, I guess is what I'm saying. Even though things are leaning bearish, I think it's a better idea instead of being a bear today, to be a bull on volatility. So being a volatility bull, I think will make you more money than being a market bear. So we'll see if I'm right about that, but that's kind of how I'm feeling about the day. I feel like volatility is going to continue to expand. And there are times where, again, volatility is not one-to-one. You got to remember that. So even if the market does this straight all day and goes nowhere, volatility could continue to expand. So you can make more money that way, where volatility typically goes up when the market goes down. Volatility can also rise in a rising price environment. Yesterday, volatility essentially rose not all day, but it stayed pretty stable. Like it rose, then it dropped, but then it gets kind of like floated around this like, and this is UVXY, for example. It just kind of floated around this 1040 area where even as the market pushed new all-time highs and continued pushing, volatility did not tank. So, and then we even got a little pop and some after-hours stuff going on. But volatility didn't tank, which left me to believe that volatility is sticky down here, which makes sense of where the VIX is sitting and kind of makes sense where VVIX is sitting. Now, VVIX under 100 tends to be more bullish, but when you zoom it on the daily, it's kind of at this point where it has been essentially bouncing recently around this 92 area where VVIX tends to kind of whip back to the upside here. So because of where the VIX is sitting and because of where VVIX is sitting and UVXY, that is why I'm currently a volatility bull short term here. So if we do see some downside on the market, I do think it's going to favor essentially a volatility hedge, I guess if you want to think of it that way. IV right now on the market is a little bit lower than average, and IV percentile has stayed stagnant around that 40% area. So if you watch the program, we talk about that quite a bit. We're right around that 40% area. I think the other day we were at like 44, so it's dropped a tad. But IV percentile still overall is trending to the upside. So it tells us that the market's anticipating, or at least in terms of the options world, is anticipating sharper moves on the SPY as we continue to climb higher, which is interesting to see. My throat hurts like a... Yup. Censored myself with a sip from my polar beverage that I'm not sponsored by. Google looking like it's at some level of a downtrend here. kind of making a lower high, higher low. So you're forming, if you guys like shapes, some level of a pennant here. So watch for a break either which way here on Google to kind of give you a push with the overall market. Meta had a little bit of a push up here. Is that enough really to quantify it for some level of upside? I think you should get a little bit more on the daily chart on Meta. But with that being said, you did technically fill this gap from 930 on that little up push there on Meta. So it could just proceed to the downside here. So be cautious with Meta if you are a bull today on Facebook. Google is really, really sitting kind of like a doji on the day. We just talked about how it looks in a pennant form intraday. And looking at the daily chart, it's just kind of like, it's kind of like a doji candle right now. So there's a lot of indecision here on Google. So we should check in on this probably in like 10-15 minutes. We'll have a better distinction on what it's looking like here. Daily chart on Apple. You're coming up on this 8 EMA. I'd watch it very closely. Typically, especially when you get like a nice trend like this on Apple, you tap that 8 EMA, you keep going, which is looking like what this candle is trying to do here on the daily. But with how heavy the market seems at this moment, this could push lower. So you want to keep an eye on that. We already talked about Amazon. Nothing's changed there. Oh, man. Tesla go even lower. Tesla back to the lows. Not lower, but new POC forming down here near the lows around 455 on Tesla. Those puts are around my top exit. My top exit was around 950. Those puts now chilling at 930. So if you decide to bag hold any longer, here's your second chance. Take your money and run. Don't be a greedy gremlin. SPY is really just kind of fluffing around the 66937. Let's zoom out here a little bit. I think we do come down here today. At least 66734, 66729, old all-time highs. And then if the bears do pile on, if volatility does seem to move into expansion, we're going to tap the Super Devil's number of 6666 to the downside today. I'm not necessarily looking to short, again, because I'm already long volatility. So if that interests you, feel free to do whatever you want with that information. But I'm not necessarily looking to short the market because I already have a volatility long on at the moment, which I find more favorable than necessarily shorting the market. I have a lot of solid names just popping off right now. It's weird. Yesterday I had a lot of my portfolio kind of lean more red, which I found interesting because the market was popping off, and now a lot of my portfolio is leaning more green. So I guess I have a low beta portfolio, very alpha portfolio, where I don't really follow the stock market. Interesting. Let's check in on Target. We just broke 90. I got an alert there. Keep a tight eye on Target. Over basically this high here, 90.21, may start some of the delta hedging on those 90 calls. As I told you guys before, when you start to see that delta hedging, you typically see a higher push in volume, which I would argue we haven't seen yet over the 90s. So once you are over 90, that doesn't mean the market makers immediately start to delta hedge. You need to go a little bit further than that because the probability of those calls staying or going in the money and staying in the money needs to be high enough for them to buy the underlying, right? So once you proceed over 90.20, 90.30-ish, a few percentages over the, so like in this case, if you're a 90 strike and it's a $1 strike difference between that and the next strike, maybe like 30 cents. So we're at like 30% above the strike price. That's when you could start to see some of the delta hedging, which obviously will propel you even higher to the upside. For Target specifically, again, this is the big level to watch. 90.97 puts you above everything on the daily chart here near term. You're going to break your daily SAR. You're going to break the 21 EMA. And again, you're going to push some pretty aggressive hedging in your favor on Target. And again, near-term trade here. So breaking that level will be really solid here. It confirms basically a double bottom on the daily chart here for more volatility, more of an upward thrust here on Target to get a little bit more air here than it's already gotten off of my entry down here around whatever it was, 86 bucks whenever I put out that video. So solid move here. Coin getting a nice little push still. If you're a bull on coin, you're going to want to watch this little gap fill here. I'll put a line here. 376.83. 376.83. That's your gap fill that was left behind on earnings. So keep an eye on that for a reaction. Breaking over that, though, you got a lot of room to move here on coin. You got this weekly SAR set up, the monthly MACD, or sorry, the weekly MACD's rounding out. Good momentum on the weekly. Like the way this weekly chart's setting up, and even the monthly chart is looking pretty solid. I like coin quite a lot. Quite a lot. There's a reason why I took a 9-to-1 spread trade on coin. So full transparency, I'll tell you guys the trade I took. I took a call debit spread on coin. Very risky call debit spread that doesn't expire till January. I longed the 500. I shorted the 510. Again, for January, I paid a debit of $1. Now, because it's a $10 spread, that means my max I can make on that entire spread is $10. So in this case, $900 for every 100. So I entered in some of these for our small account, right? We have a small account challenge in our Discord community over exclusive trading called Seed to Tree. And this is actually a little bit over leveraged actually for this portfolio because of how I have it structured right now. So this is a risky trade. It's not only to mention that it's also far out the money, but again, this is the kind of offside trades I talk about, especially in this environment where you can establish a trade where you're not just buying directional calls or directional puts, but you can establish a trade like this where, yes, it has very low probability of working out, but if there is momentum to the upside here, you can lower your risk exposure. In this case, instead of buying one call for, $500, $600, $700, $1,000, whatever, I could buy a spread for $1, and even if I get that move in the right direction, I can trim it out at $1.50, $2, whatever, and still make 100% versus putting so much money on the line for a small account. You just have to balance your risk in terms of time and realistic goals, where I don't really think this is going to go in the money. Could. By January, it'd be risky, but it could. Anything could happen. But at the same time, if I look at the Greeks for these two contracts, essentially, if I can get this north of like 375, I should be seeing at least a 70% gain on the spread. So that's kind of how I did my math there, where I don't have to put as much money on the table, but I could still enjoy the risk to reward here, where I'm paying less than a share in this case for this company. I'm paying for like a third of a share to make way more money. So just sharing that as an idea if you guys like that idea. Target at 90.20. I'm going to keep an eye on Target here because I have a vested interest to see if my thesis works in real time. You guys taking any trades thus far? You guys are more a little more talkative on a Thursday, a little quiet in the chat today. Hatchet says, where's the gap fill on coin? Can't see. Don't like how Webull shows gaps. Gap fill on coin. I just marked it out. 376.83. That's your gap fill from earnings on 7/31. That's the gap fill. And you're above all your short-term EMAs, MAs on the daily. Again, the weekly looks solid for a push to the upside. You fill that gap. At the same time you fill that gap, you're going to break that weekly SAR with your MACD flipping. Good momentum here. It's not too high, but it's over my 54 number, so we're at 59. This is solid to the upside, in my opinion. Very solid. Target got a little bump and dump there. Bumped it to 90.28 on a little bit higher volume, and now selling off just a tad, so it looks like we're going to have to come back to that, unfortunately. Nothing too exciting there just yet. Unfortunately. Let's pop back to the market here. What are my so BZ asks, what are my feelings for a credit spread on coins? So that's actually a great question. I'll explain why I took a debit spread over a credit spread. So, oh wait, you guys can't see this. Yeah, because it pops up. So right now the IV percentile is 44% on coin contracts. So that means that 66% of the time the stock has been more volatile. When I perform a credit spread, what I want is IV to deplete. Because as IV goes up, contracts get more expensive, right? So theoretically, a credit spread and a debit spread, you can make money both ways and still pick the correct directionality that you want to pick, which is sideways to up or sideways to down, right? But the one edge that you have between a debit spread and a credit spread is that it is essentially IV. If IV percentile is below 50%, I typically want to target a debit spread because I'm playing on the odds that volatility will expand. If volatility expands, the contracts are worth more. If I'm in a debit spread, I want to sell my strategy for as much as I can, right? So I want IV to go up, right? But if IV is already high, I want to take out a credit spread because I want those contracts to get as cheap as possible so I can sell them back for as cheap as I can, right? To close out the strategy. So I want IV percentile to be high if I'm opening a credit spread. So that way I can take advantage of that IV decay. So those contracts are worth less quicker. And as a result, I can get out of them at a lower price even faster. So With this particular name, with coin right now, IV percentile right now is at 44. So again, that means 66% of the time IV has been higher. On top of that, your historical volatility or your HV percentile is only 12. So that means 80, I hate doing math in real time. What's that, 88? 88% of the time, volatility on the underlying, so on coin, has been higher. So that tells me currently coin is moving very low volatility in terms of how it's moving on the stock, right? On the actual shares are moving. It's not as erratic as it typically is. And on top of that, the IV on the contract is also lower. So that's kind of your double whammy on where I want to lean more towards a debit than a credit, because I'm looking at the HV potentially expanding, which means the stock is more volatile in general, which means theoretically that would imply, get it, implied volatility, imply that IV goes up. So if HV is low and IV percentile are low, that's a double whammy where IV goes up, or if HV goes up, then theoretically IV would also increase, which means my contracts are worth more, which means a debit spread is more favorable than a credit spread in this particular situation, because I am betting that IV, or in general volatility on this name, will go up over time. How was that for an answer, BZ? I think that was pretty succinct, but if that was confusing or if I missed anything there, feel free to ask. I'm pretty sure we nailed it. Very, very, very good question, but it is nuanced. So I want to make sure you understand that. Market just chopping around this 669.37 LOI. Not much to see here. Q's looking kind of WE, but we'll see if that pans out. IWM right now at the lows. Watch this 242.39 to potentially tapping bounce to the upside here. Also known as Brian. Thank you. All right, Brian. I'll remember that. You're welcome, my friend. All right. VIX kind of sitting sideways. So, guys, we got nothing to see here right now. Market is pretty sideways. We're looking like we're trying to pull some level of a double bottom or like quad bottom down here around 668.96. Kind of bounce, rally to the upside. Q's looking more like a clean double bottom kind of look here. But IWM is at the lows. And again, kind of like a double bottom look here. But this looks a little bit more bearish. The VIX, meanwhile, is just kind of hovering at the high a day. Hasn't continued to go higher. It's actually, or wasn't trending higher. Now it's kind of just starting to go sideways a tad. So this could be a little bit of a cool off before it gets another leg here. VVIX is moving lower, which is interesting. So in this scenario, VVIX moving lower while VIX is moving higher is actually going to be bullish for volatility and theoretically poor for the market. So what VVIX does, again, this tracks the volatility of volatility. So how volatile is volatility? Meaning, is volatility going to continue the directionality that it has or reverse theoretically? So if we see the VVIX fall and if we see the VIX rise, this is theoretically implying that the VIX will continue on the trajectory that it's on. Meaning, in this case, if the VIX's trajectory right now is to the upside and VVIX is to the downside, then this is saying that there's a lower probability of the VIX reversing, consequently meaning that the volatility will continue to expand. Now this can change, but as it sits right now, ever since basically like 9:45, the VVIX has been moving down and the VIX overall has been moving up. So this is telling me that volatility more than likely will continue to expand again, or today. Now, I will remind you, these two levels are very important on your chart today, 1637 and 1653, to see if volatility actually does move into expansion, not to mention yesterday's, well, I want to say close at the high. Did we close at the high there? No. But yesterday's closed pretty high, 1932. I'm sorry, 1632. So 1632, 1637, 1653, where we're very close. So there could be just a quick move here and pop it and go, especially with how this is looking right now in SPY. You're consolidating at the lows. This could spell trouble if some bulls decide to sharpen their teeth and take a bite out of the market here. That all works in the same direction, right? Again, volatility in the market don't have a one-to-one, but they tend to move together. IWM just caught some downside here, broke underneath that 242.39 LOI. Got a little wick here, some volume. So looks like we're going to see some small cap bulls try to reverse it out. It's looking a little sketchy though. UVXY also holding pretty flat, although more elevated on the day in general. So I would look for UVXY to continue expansion north of 1050 if you want to use that for simplicity or a simple whole number here. Microsoft basically consolidating at basically open, right? POC here as well. lower high, lower high, lower high. Technically higher low, but then you also made a lower low here, so this is looking more bearish if anything. Nvidia, nice little V bottom here. I wouldn't be a bull on Nvidia. This is going to be your level to watch today, essentially. 190.23. You're close to it right now, but if you don't see the bulls show up over 190.23, this is going to sell back off to the downside. Exercise some caution there. If you're already bullish on Nvidia, now would be a good time to slap a stop on. And I'm talking if you're like an intraday trader. Slap a stop on to be careful. Obviously, you'd be in profit by now, but 90.23 is going to be a key point to watch intraday on Nvidia here. Just simply looking at the pre-market high, that is just basically what you want to watch out for here. You're going to see a lot of price reaction here, especially off of this kind of move. Apple here starting to round out, so this is not a good look either. This is also looking more bearish. You're under POC, under the 200 MA on the 1 minute here. You are above all your other EMAs and MAs, so that's a good sign. Your MACD is starting to flip though. Momentum isn't really great, so unless we get some news or something to pop this here, this is looking like if it rounds out, and you could use this as your trigger at 255.70, that breaks, you're going to drop back down. You're probably going to hit lows. Meta, it's probably going to go down. So far, all the Mag 7 names are leaning more bearish. Google did break a new high, make a new high, but now this could add some fuel to the fire to the downside here if it does get a little bit of a retracement here off of this new high that it just made. RSI is still pretty low, so we're not seeing a lot of bull confidence here on the 1 minute as your MACD is rounding off here, potentially signaling a reversal here as you break the green star as well. Amazon's the only one that's looking like it's going to try to put in a reversal here, honestly. Kind of a double bottom here, higher lows, but again, under 221, it's pretty bearish on the daily, so I don't know if there's enough fuel in this. You got the 200 MA chilling right now at 221.12, so even if we get a push here, because of that daily confluence and where we are on the 1 minute here, you're more than likely going to shoot down to the downside. And Tesla, trying to protect and hold the low here. You kind of have a funky looking inverse head and shoulder, shoulder, head, shoulder here on Tesla. So if there is a reversal here, it's going to come pretty soon. But if it gets rejected, you're going to break new lows here. So basically all of our Mag 7 names to me are indicating at this point, A, risk off, but B, they're, as you heard my rhetoric as I speak about all of them, they're all leaning more bearish than bullish. That in conjunction with how VVIX is sitting, in conjunction how volatility is sitting, which is now testing that first area here, 1632 on the VIX. Everything says risk off for the rest of the day or even be a bear. I'd be very cautious as a bull unless you're like a stock picker. Like I said, ironically, my portfolio is actually doing really nice today. Even though the market's like leaning more bearish, volatility is looking to move up. All my individual names I picked, which were in the dirt yesterday, are now in the green. So I guess I have a low beta portfolio where I'm going against the market. But it looks like things might flip the script here just a little bit in terms of my personal portfolio. But as it sits on the market, you're going to want to be very careful here. We broke through that first level of 1632, new high on the VIX 1635. So this goes without warning here. You got these two levels here. If we break, especially if we break 1653, this is going to mark up. We're going to have a volatility expansion. You can use 1050 on UVXY also for additional confluence if you would like to. Check one more thing here. And then I'll be honest, guys, I'm probably going to hop off because my throat is killing me, but I didn't want to not do 2 shows today, or 3 shows this week. I like to do at least 3 shows for you guys. And by the way, if you haven't already, quick little plug, I like to do it twice a show. Pop on over to the YouTube channel. If you haven't already, hit subscribe. Once we hit 500 subscribers, we'll do the show every single day. So if you enjoy the show here, please make sure you do that. And in general, if you want to support the show, if you've already done that, do me a favor and interact with me. Say hi in the chat. Like the stream. I think, how many likes do we have on the stream so far? Let's find out. If we can get the stream up to 10, here, I'll make a deal with you guys. Right now, the stream only has 3 likes. And I've got 80-something people watching. The stream has 3 likes on YouTube. If we can get that over 10, I will stream until 11 o'clock. So 7 more people like the YouTube stream, I will kill me for another... I will kill my vocal cords. I will fry them for another 40 minutes or so. So if you haven't already, open up your YouTube app, hit like, and if we get to 10 before 10:20, so in the next 7 minutes, we get to 10 likes on the stream, I will make sure to hang around a little bit longer. So there's your motivation there if you have any interest in that. Yeah, 1050 on UVXY, big level. I just confirmed that. Let me confirm one more thing here. Yeah, how this is set up, you can just use 1653 if you like, for, again, simplicity. If this breaks, market goes risk off today. and probably volatility is going to expand aggressively. Nice little pop here on UVXY. Currently sitting at 1042. Again, that big number to watch here on UVXY is going to be 1050. SPY near low a day. Q's holding it up for now. And meanwhile, IWM is grinding even lower and making a new low a day. Let's look around a bit more. Let's check out our sectors here real quick. Eddie says the got you, bro. Thank you, Eddie. Appreciate you. Omar says, can we get X swallowing a whole pickle at 10 likes? I think he's gonna want a lot more likes than 10. I thought about doing some fun stuff like that. Not me swallowing a whole pickle, but like thought about doing some fun stuff on stream. I'll get around to that one day. Eddie says, thoughts on coin for a day trader now. Let's take a peek. Actually, Eddie, it's not a bad idea. All right, so we spoke about coin a little bit. Man, look at this. This was my trigger level from yesterday. I gave everyone in Seed Decree. This 351.89. Look at that. Bounce right at open and boom, right to the upside. So now if you're looking to get in as a day trade, I would exercise a little bit of caution. If I was to go long, I would wait for a little bit more of a reversal here. It might come down a little bit. Look at this VWAP area right here at 360.28. I'd wait for 360.28 because then this is the only real like little area of consolidation you have. So there's some level of volume there, obviously some interest there that will put you underneath all your near-term MAs here and your VWAP. But I'm thinking if that comes down to like 360.28, wicks it and bounces. So I'd look for a quick reaction in this scenario where it comes down quick, hits it, bounces, and comes back up. That's where I would take the entry. Otherwise, the other way I would take a long on coin, if I had to, I don't hate it here, but I would wait a little bit longer and wait for a break of this price action here, this little area of consolidation. So getting over like 364.50. So you have two scenarios here: either break down, tap it, and look for a quick reversal to get in, or getting over 364.50-ish, so breaking above this price action range here. It'll put you over POC, it'll put you over all your EMAs and MAs. Your MACD at that point would have already rounded out to the upside, and you by that point probably will have about a 54 on your RSI, so your momentum would shift as well. That's why I said I don't hate it here for a long, but I'd rather overpay a tad just to have more things going in my favor up here, or wait down here again at 360, like 20-ish. To get the long, assuming it's a quick reversal. If it comes down and we're leaving a wick, I'd get in on the wick in that scenario. Now, you might pay a little bit more because of IV on that, but that'd be better than getting in now, theoretically. So those would be the two scenarios I would be a bull on coin today. I wouldn't really short it. I just wouldn't short it today in general. I mean, you could. Obviously, you do whatever you want. I just wouldn't. You could have a crossover here and break VWAP and consider a short. I just don't think there's going to be a lot of meat on the bone on a short position on coin. It just wouldn't be my cup of tea. You could do it. It wouldn't be a favorable setup. I'd prefer to be a bull either at two of those scenarios there, and that would be all I'd look for, unless things get like awful and you get down to right around here at 355.95. At that point, you're at the low. You're at the first level of retracement here from that open move. Plus your 200 MA would be there as well. So I guess there's 3 points on the chart where I'd consider a long. But it would also just depend on how the overall market looks at that time, how volatility's sitting, essentially those two things, how the overall market looks and how volatility's sitting. That's what I would be focused on before basically taking any more trades for the rest of the day, to be honest with you guys. Just because things look, they're shaky. And whenever volatility looks like it could expand, and I tell you guys this on the program all the time, anytime volatility looks to push up, you will be wrong more times than you are right. You just will. Because there's a bigger, again, how does the VIX get its value? It's a bigger price disagreement on SPX, right? The bid and the ask are further away. So in general, especially as an options trader, and we'll just use this as a sentiment, right? In general, people are disagreeing about the price of at least the overall market. So if they're disagreeing about the price of the overall market, they're probably disagreeing about the overall price of individual stocks as well. Now, that won't necessarily translate, but just from a sentiment point of view, right? So if we're disagreeing about what something is worth on an options chain, right, That makes it harder for you to get in and harder to exit. Now, there are times where you can get on the low end of the trade on a wide spread and get out on the high end of the trade of a wide spread and actually works out for you really well, or just get on the low end of a trade on the wide spread. But I would just be very cautious anytime the VIX is pushing above an area, especially like this, where we just tapped our first resistance point here at 1637. If we do break above the 1653, there's a very high probability that volatility will expand, and that's going to cause for a lot of unfun times to trade the market, at least in my opinion. IWM is just getting slaughtered right now. This is just grinding lower. It looks like the bulls are going to try to reverse it here. Got some decent volume, leaving some wicks here. So the bulls are going to try here. But I would not take a stab on IWM yet. Let's see if our rhetoric has changed on our Mag 7, and then I'll pop over to check my YouTube stats to see if you guys dropped enough likes for me to stick around a little longer. Microsoft, lower high, lower high, lower high, lower high. Now underneath everything. Not good. Very bad. Again, 190.23 is the area to watch on NVIDIA. We're right there, and you're seeing in real time these wicks up here at this current price. And we're trying to break it right now, which is great if you're a bull, but you're seeing price reject here, 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 multiple times. Now even on this current candle, leaving a wick. So you're rejecting this 190.23 area. That the more times you reject that, the higher probability of a downside move. I kind of want to take puts. I'm just not going to because I'm going to control myself. I already have a volatility long. I'm not going to take puts. But if you like that idea, I would take puts here. I'm just saying. Apple, it's trying. Not great. Meta's going to move lower. You need Google to hold on to 246 if you're a bull. 245.80. Otherwise, that's going lower. Like I said, 221 on Amazon. We're just no strength here. Tesla at low a day. The market's going to go down, guys. I'm sorry. Volatility just broke its first point here. Look at UVXY, 1048, 1049. If this breaks 1050, you're more than likely going to mark up. Because now you're going to push some delta hedging on volatility contracts. Yes, that can happen too. On ETFs, and that will influence the market, and it will influence volatility. That is a thing. Our VVIX is moving up though on this move, which does make sense. You had a sharper move up on volatility. Consequently, VVIX would go up because volatility has moved sharper. If volatility has moved sharper, it would imply that the volatility of volatility is increasing. So that makes logical sense. SPY at the lows. Qs are the only thing holding on here really. And I'm not confident, as you can hear my rhetoric on all the Mag 7 names. I am not confident on any of these right now. That can change. It is not looking good. And again, I'm speaking about today, near term. This is not looking good for the bulls today. SPY just went red on the day. All right, let's see. Do you guys want me around longer or no? Let me refresh that. 8 likes? 8. If we get 2 more likes on YouTube, I'll give you 3 more minutes. If we get 2 more likes on the YouTube stream, I will stick around until 11 o'clock. Otherwise, my throat's killing me, and I'm going to go take like a Ricola or whatever. Likes are free, guys. Help me in the algorithm. Yep. Like I said, IWM bulls were going to try there. They tried. They failed. They failed. I'm telling you, watch this 1050 on UVXY. If this breaks with some volume, you're more than likely going to move quickly on the VIX to the 1653. And then if the 1653 breaks, then we're going to push on volatility. That's why I'm a volatility bull right now. Microsoft's going down. All right, I'll put my money where my mouth is. I'm going to shorten video. I said it. To the 190s. Yeah. All right. I'm long the 190 puts at 154. make sure you get those likes. We got 2 more minutes. If we get up to 10 likes, I'll stick around till 11, so we'll do this trade together. Otherwise, you're on your own. You're on your own, kid. All right, I'll put it on the watch list. We'll pop back over here. Put it at the top. We can get rid of that Tesla trade. That still worked out pretty nicely. Oh man, Hatchet trying to cheat the system. You can light the portrait version too. Yeah, you got the portrait, so you got the mobile version, and you also have the horizontal version. So I don't know if that translates. I don't know how that works, to be honest with you. So we're basically right on my entry here. I got in on the 190 puts for this week at 154. Again, basically planning on NVIDIA staying sub 190.23 with how volatility is sitting, with how basically all the Mag 7 names look. It's looking like we're going to get a slippery move here to the downside. We're not maintaining a lot of great bull momentum here. MACD's starting to get pretty tired here on the 1 minute. The 5 minutes not looking great. We're leaving a wick here. We did break the red SAR here, but there is no follow through. Basically, you get under the POC here, you're more than likely going to pull even lower on NVIDIA today, back to the lows perhaps. 189.88 is that POC number. Basically, you want to watch right here. Now, the market could pile into NVIDIA to try to hold it up, like NVIDIA putting the Atlas on its back and holding the whole market, so that could happen. But I don't, again, that's why I took the puts. I don't think it's going to happen. We got to 10 likes. Thank you guys for the support. I will stick around until 11 o'clock. Another 35 minutes. I will hang out with you guys, so we'll walk you through this NVIDIA trade. And we'll see it through together as a team. How's that sound? Let's get some yours in the chat. Especially Eddie and Toby. Volatility right now sitting around 1641. VVIX continuing to move to the upside here. UVXY tapped 1050 and sticky right there. It's staying there right now. NVIDIA shooting down here. Again, I have a 154 entry on those. I'm going to take a few off here just to be safe for 8% because I am shorting NVIDIA, which is not fun. But I anticipate much further downside if we can break below that POC. So you're not out of the woods here as a bear by any means. So you're basically in this range between, again, this 190.23 and this 189.88, where it could fart around. But the longer we stay sub 190.23, the higher probability of getting a yoink to the downside here. Now, if we don't move lower here in like the next 10 minutes or so, then I'm going to want to get out of the position because there is a chance that the bulls sustain north of that POC area on the 5 minute and then try to push it again. So there's good risk to reward here both ways because at the high of day, these contracts are worth, what do you say, 260? So I've got about $100 to make here or so. So good risk to reward. It's just a matter of managing this trade, not being greedy and holding every single contract until the end of the road, you know. SPY trying to round out here. The Qs are trying to push up too, as is IWM. The VIX getting a back test here of that 1637 area. UVXY first rejection of the 1050. This is not going to be an easy area to break either, mind you, but if it does break, it will pop. Microsoft continuing to make lower high. Lower high, lower high, lower high. Technically, you could look at this as higher low, higher low, higher low here, but Apple not showing a ton of confidence here either. So where, especially where NVIDIA is sitting, where Apple's sitting, if there is any semblance, or if the sentiment flips bearish, both of these names are set up to pull down pretty quick. Meta near the lows. Google has continued not to show too much strength ever since it tapped all-time highs. Getting south right around here. Basically this candle high here. 245.42. That's more than likely going to spark more downside here. So if you're a bull on Google, you want to stay above another 20 or 30 cents or so. Amazon, I might take a short on Amazon now. Just near that 221 area, which is going to be a daily area of resistance. And intraday, I love when my intraday and my dailies line up. If it taps the 200, I'll take it. Otherwise, I'll wait. If you missed your trim on NVIDIA, you're back at that 8% here. If we tap the 200 here on Amazon, we'll do the 220s probably. I'll keep an eye on the 220s on Amazon. And then I'll put a little alert here, just in case I'm not paying attention. Create an alert. There we go. So that will ping me. If it goes off, I enter. If it doesn't, I don't. Or at least I'll pull up the chart and look. Currently, those contracts, the 220 puts on Amazon are around 139. They're at the low of the day. So theoretically, if we go a little bit higher, Delta 42 contracts would be, if we go like, what, 50 cents higher, 15. Oh, you're on a $1.20-ish, $1.25. So in perfect world, we tap the 200 MA. Those contracts are worth about $1.25, and that's where I'd look to get in. That would be, in a perfect world, what I would do. NVIDIA consistently tapping this 190.23 and getting shot down here. Based on where this is sitting now, because some time's gone by, and now your MACD on the 1 minute starting to round out here and potentially push to the upside. I want to keep this on a close watch because I might want to close this out here, because now we've consolidated at the higher end of this, like, this chop zone, I guess we want to call it, where I'm anticipating it staying basically under 190.23 and then using 189.88 as like my trigger to the downside. So we're kind of just fluffing around it here, but we're consistently tapping it. So if there is a reversal, and I should say a continuation here, it'd probably be pretty soon. So I'm going to want to jump out of these pretty quickly here, very soon, if there's follow through here. So basically in the next 2 or 3 minutes, if we break the top of this range, I'm going to want to get out, which right now I'd be at cost. So it would be nothing lost there. But it's still having a hard time getting over that. We'll see. So far, Amazon rejecting early. UVXY back near that 1050, currently at 1046. VIX at that first support level, 1637. Got a lot to watch today, gentlemen and ladies. Ooh, harsh rejection here on SPY at the 50 MA. Big red boy here. That's a decent rejection. Decent rejection on the Qs as well. And on IWM. So all markets getting a decent red candle here. NVIDIA not feeling it. Not feeling it at all. Amazon felt it, but NVIDIA not really feeling it here. I'm going to slap... What's the low with this candle? 48. I'm going to slap a stop loss on at 147. So that'll stop me out if we break that previous low on those candles. But because I trimmed some at 8% and doing some rough math in my head, that still leaves me with a gain on these contracts. So I'm just limiting my risk here. The main reason why I want to put a stop on, and the main reason why I'm putting a stop on in the red in this theory, or in this case, is because the market's seeing a little bit of downside here as volatility is moving up for the most part. But NVIDIA is not feeling it yet, right? It's not reacting as much. So that could be the sign that people could be pushing into NVIDIA. Now, that's not the case so far. Now we're back at around 8-9%. But that at that point in time when I was looking at this, that was something I wanted to add on to be safe. So now we're back at that 8 to 9% gain if you missed it. There's another chance to trim. You're going to want to watch this SAR break here in combination with breaking below the low of this candle at 189.91. That puts you right in line with the 5-minute POC at 189.88. So tons of levels to watch in this area. It's very congested here. But basically the only level you really need to know and to watch is 189.88. Getting under that more than likely will spell downside for NVIDIA, especially if we break through this cluster. So see all these colored lines here on my chart? Breaking through that cluster, that's going to be big. All right, we're a few cents off of my trigger here. So I'm going to trim a few more out here just to be safe, because we're near my trigger, and triggers don't always break on the first tap. So I'm going to trim a few out. So that's going to be 11%. Nothing glamorous yet, right? But we're de-risking. We're making money. We're stepping aside. That's okay. UVXY is over 1050. It is now at 1051. So if there is any continuation there, you're going to see a volatile expansion on volatility. You're going to see this mark up probably to 11. Like realistically today, this could go up to 11 easily, especially if the VIX breaks 1653. Watch it. Watch it, watch it, watch it. SPY new low a day. The Qs are really holding together everything. So basically, if Nvidia sees some downside here, because the rest of the Mag 7 aren't looking great. EB says UVXY volume. Yeah, man. That's why I said at 1050, you're gonna see volume pour in. If this breaks above 1050 and continues pushing, you're gonna see more bulls come into, you know, the volatility ETF. More people coming into UVXY because they're gonna have to hedge for the 1050 calls at 10K. And look at the put side. Ooh, only 3K. Look at the 11s, 10K. Look at the put side, 2K. This right here is a gamma ramp on volatility comparatively to the puts that would be de-hedged for, theoretically. Your calls are twice as heavy as your puts are, comparatively speaking, right? There are way more volatility bulls than there are volatility bears. So as this pushes, you become a self-fulfilling prophecy, essentially. So as long as the VIX continues to the upside, UVXY is just going to also churn and burn with it, where not only is it going to be impacted by spot VIX, but it's also going to be impacted by the market dynamics of options going in the money. So you kind of have a double whammy there, where yes, you could play directional options on the VIX directly, and there's nothing wrong with that. But with UVXY, you have a little bit of an added edge if you are looking for that like gamma ramping ability, right? Where those options in the money are going to further perpetuate an increased stock price, in this case of UVXY, as they push more in the money, because the market has to hedge for those positions. So not only is this going to trace spot VIX, but it's also going to hedge for those positions as they go in the money. So you're getting a double whammy. That's why you'll see me, if I ever play volatility, like I alerted in the Discord yesterday, and I'm still long it, but if I ever see me play volatility, I typically play UVXY. Once in a blue moon, I play VXX. Doesn't really matter. But I'll look for that, because that gives me an added edge over playing just the VIX. Yes, the tax consequences are different, but I tend to make more money with UVXY, I guess I should say. So as you can see right here in real time, where's the support? Where are we stepping in? We're stepping in on my little red line here, but that's also right around 189.88, which is the 5-minute support. There is so much. There's a heavy cluster here of your longer term MA. So you got the 200 MA, you got the 50 MA, my purple line, and then you got the VWAP right here too. So it only takes 1 bar to get through these, by the way. That is only a 30-cent drop to get through all of these. So again, the risk to reward here is pretty decent. If there is some bearishness that comes into NVIDIA specifically, you break between these levels, you know people have got the 50 MA on their chart, they got the 200 MA on the chart, they got VWAP. Even if you don't believe in these lines on your chart, algorithms trade them and other traders are looking at them. People are going to put their stops here as well. If those hit, your stops are going to get stopped out, you're going to have cascading sells, and you're going to push lower. You will. It's very rare that I speak in, what is it? What's the old Sith saying, my Star Wars friends? Only Sith speak in absolutes. Yeah, that's true, but there are very few times where I speak in absolutes, and when I do, it's because it's true. Excuse me. Sorry if I'm a little quiet here. Like I guess I'm trying to keep... Hopefully you guys haven't noticed much difference. I'm really trying to force out as much air through my windpipes as I'm talking. So it seems like I'm keeping up the energy as much as possible. I hate watching or listening to people who do specifically finance streams that are just like staring at a wall watching paint dry. It's boring as hell and I hate it. So I try not to be that for you guys. All right, we are breaking that key area on NVIDIA here, now tapping the 200 MA. These contracts did go a tad higher. Again, my highest trim was around that 170 area for about 11%. Currently, we're right there at 171. High recently has been about, or I guess I should say the highest in this localized range is 174. So keep an eye on that. Look at the market here. Back testing the 50 MA again, so we'll see if there's a rejection here. 1, 2, 3, 4, 5, 6, 7 green candles in a row. Tapping the 50 MA. If that turns down here, you're going to break the lows and get shotgunned in the foot. Here, these contracts are only 175. You got another $4 here for my highest trim. Oh, it's looking slippery. Slip already. Banana peel it. Banana peel it. Look at the 5-minute. Ooh, if the Bears want to take a bite out of crime, they'll do it here. All right, moving my stop loss to break even on Nvidia. That way, no matter what, I made money and I lose money. I'm not risking anything at this point. So now, again, the game plan here, we break below, essentially, we're below the trigger, which is good. That's a solid start. But it would be irresponsible to ignore what we're seeing right here on the very, very short term. We are pretty burnt out on the MACD. You've got your 200 MA, your 50 MA, and your VWAP here. That's why I moved up my stop, because there's a chance that you get a bounce here. You got good wick there. The Bears didn't really follow through. That's not saying it's dead by any means, but it does need to continue here. So what I would like to see, essentially, is for it to say south of this POC, and the localized POC is 189.97. Staying, basically, we'll use 190 for simplicity. South of 190, and it just kind of consolidate here for a little bit. That's going to allow this bear move, theoretically, to cool off before pushing lower in this scenario. The 5-minute hasn't even flipped bearish yet. The 3-minute hasn't even flipped bearish, and you do have a 3-minute green star here, and the green, your MACD line's about to cross your signal line here. So this is cooking up for a bear move. If the Bears want it and they break this, this is going to cascade on all time frames. Your 1 minute's already bearish, your 2 minutes bearish, your 3-minute is ready to go bearish, and your 5 minutes ready to go bearish. So this is like a primo bear setup if this breaks. Little volume profile break here as well. If I'm a bull and I wanted to take a bull bet on Nvidia, I would take it here, like literally at the low here on VWAP, and a mega tight stop, because there's a chance that you could bounce it and rally it here. But if this breaks, this low breaks here, this will go down, and this will come at least 189.30, more than likely low a day, based on how all of the time frames look. SPY rejecting the 50 MA again. Now pushing a little bit lower here. Watch the low a day break. If you're a SPY trader, basically watch Nvidia, because if Nvidia fails here, that's going to cook a lot of bearishness into the market, and that's going to spook the whole market essentially. So if Nvidia is really walking on thin ice here, that if you're a bull on SPY, you need this to hold. If this doesn't hold on SPY, we will go down on the overall market. This is a perfect storm for a bear setup because of where vol. Look at the VIX. The VIX has a 1653 really close in sight, 11 cents away. UVXY is right at 1050. The market is at the lows. It's rejected the 50 MA. Everything hinges on this because remember, Nvidia is whatever it is, like 10% of the stock market. It's so sensitive here because of where the volatility is sitting, because of where the general market's sitting, even because of where the Qs are sitting. This will drive a lot of fear if this breaks to the downside, which is why I have puts and why I have a volatility long. Now, the longer we stay here, and again, like I said, this wasn't going to be an easy break, and I prefer if we consolidate here for a little bit and then fire down, because that gives us more legs on the bear trade. The longer we stay here, the further down we're going to go, essentially, as long as we don't break the highs. There we go. So that's a new localized low. So whenever you hear me say localized, it means like looking at a certain area of price action. So we're looking at like basically the last 5 candles. We made a new low from that previous low, which would theoretically show more bearish price action. Now, this 1 minute's pretty burnt out here, which is why I wanted more consolidation. But like I said, the 3 minute, we just broke the green SAR on the 3 minute. The 3 minute and the 5 minute's ready to cook to the downside. And it's ready to roll. UVXY 1052, VIX 1647. So watch volume here on NVIDIA, because this will spell essentially more fear in the market. New low a day on SPY. Leaving a decent wick here on the Qs. IWM is ready to turn over here too. I really would have preferred if it hugged around here just a little longer. But hey, beggars can't be choosers. If you miss it, we're still rocking a nice little gain here. Around like 14% or so. First price target's 189.30. 189.30. Around there. We'll take it as they go. We'll see. Again, if there's a quick fall, you always want to take profit if you're long options, because a sharper fall, you get typically higher IVs. So you want to capture some of that higher IV, some of that higher volatility. Even what we're seeing right now, we're not going anywhere, but the contracts are moving a little aggressively. We moved up to 182, as you can see. So even something like that, you want to try to capture that if you can. Pushed and wicked lower, now trying to close a little higher here on that candle, and they do. UVXY now 1055. Ooh, look at the VIX. VIX is at 1653. So if this breaks, you're already confirmed with UVXY over 1050. So if we see a push here on the VIX, volatility is going through the roof. We're getting a markup on volatility today. You could see 17, 18 on the VIX today. You could see 11 on UVXY today if we see momentum here. It's very realistic. There we go. Beautiful. That's what we waited for, everyone. I'm going to trim out a few here into this volatility. Beautiful. I love it when a plan comes together. That's 28%. Right to my first price target, too. Right there. 189.30. Boom. Chef's kiss. Chef's kiss. Exactly what we wanted. Exactly what we wanted. And like I said at the beginning of the stream, I'm not sure if you guys remember, it's very likely we're going to tap this 667.29, 667.34 area on SPY as well. Even more so, probably, if we saw the volatility expansion, which is looking like it's happening. VIX is breaking. UVXY is still going up. You're probably going to test the super devil number of 66666. So now what I'm looking at next for on NVIDIA here, right around here, 189.07. And breaking that, probably go low a day. Yeah, watch the 200 MA for a catch, which would probably line up with low a day. By that point in time that we get there. 3 minutes solid. We got time to move here. As long as this doesn't wick back up in the next like 2 to 3 minutes, this is going to continue to the downside. Which is like anything's possible, right? But what I'd like to see here, a tiny move up, back test the 8 EMA, 1 or 2 minutes, then fire down. Now we do have this red SAR here on the 1 minute, so getting a little bit of a cool off here. Because this was already a pretty extended bear move on the 1 minute, that would allow us to, again, because I wanted consolidation up here first, which we didn't get, which we got this instead, which is fine. I hit my price target, I win. But in this scenario, because of how this is formed out so far, I want to come up a little bit here, kind of float around here for a bit, then fire lower, essentially making like a lowercase h. That's what I would look for in this particular scenario. Even, or if we see more bullishness like this, if we could break the red SAR and then fart around in that original zone here, which it looks like we might get to, which is fine too, kind of hang out here for a bit and then fire lower. Qs didn't even make low a day on that, by the way. Neither did IWM. SPY did, though. That, what I just said on NVIDIA, lines up really nicely with the VIX as well, because the VIX is broken at 1653. Look for this to backtest, similar to this price action here, right? On the VIX, flutter around here for a bit, then mark up. Same with UVXY. Kind of push a little higher, flutter around here, then mark up. that all would align with the same theory. See, you guys, all you had to do was like the stream. You got an extra little trade out of there. You got another little 28% banger, possibly more, right? Now you're writing a risk-free trade with a stop loss, and all you had to do was like the stream.
Hey, that's pretty good.
Does anyone get that reference? There's got to be someone in here, especially if you're watching on YouTube. Do you know who that is? Who says that? A man who has fallen from grace, in my opinion, but still a very funny man at one point in time. Someone's got to get that reference. Hopefully. Somebody out there. Oh, boy. Ooh. Yeah, I apparently have a very low beta portfolio. Some names are getting hammered, but like other names are doing pretty nice. I'm happy to see that Target's holding up in the Bloodstorm so far at 89.20. It's just marginally green, but still better than being red, right? Croc's holding up fairly well. I'm just highlighting names I spoke about on the program here. Currently, that's up about a buck or so, right? Up 0.58, not bad. UA, I know, Toby, if you're still watching, we talked about UA the other day. Up almost 1%. It's interesting. 10B, we've talked about on the program. Just highlighting a few names for you guys. Decent strength in the weakness. Not too shabby. There we go. Back test and reject. This is a little bit thinner than I anticipated. I anticipated more of a rounding, meaning more candles to form that lowercase h. But hey, this is what I'm talking about. Lowercase h. I guess you can also call it like a bear flag. I don't like bear flags though, so I like letters. This is an H. Break the low, you're gonna get another leg. UVXY 1056, VIX 1660, and VVIX continues to mark up, which again in this scenario makes sense because volatility has become more volatile. As a result, the VVIX will go up in this scenario. So if there are faster moves on volatility, then the VVIX would go up, right? Because that makes sense logically. But if there's a slower move up, like we saw earlier, where we were just kind of slowly moving up and the VVIX was moving down, that would, again, support the theory that you would continue in that direction, even if it's slow. So either way, there's still a bull scenario for volatility, no matter how you sliced it. They just broke the low there on NVIDIA, or I should say the localized low. Bulls are really going to try to step in here, as they should. Probably get another 60 cents or so for my next trim. Remember, bear moves are like elevators and bull moves are like escalators. Anytime you get a bear move, like a pretty definitive bear move, it's typically a stronger drop. As you've seen today in real time, we did Tesla and we did so far NVIDIA, right? And yes, you can kind of like plod to the downside, but where the bears make their money on those sharp, quick Marubozu, right? Marubozu candles, like this candle right here. That's a candle with no wicks. That's just a body and basically no wicks. That's where a lot of bears make a lot of their money, on those Marubozu candles. I just love saying that word. It's so fun to say. Let's check in on Tesla, actually. See, I'm pretty happy I closed it where I did. I got out, whatever it was, here? Roughly at like 455.26. Had I held on, I could have, right? It just wouldn't, maybe I would have got a little bit more if I went here. I mean, obviously I would have, but like, anytime you make quick money on a contract, take the quick money, especially if it's like a larger gain. Take the quick money. Yes, you could make more, but 9 times out of 10, the quick money doesn't stick around. Take the quick money. If you can afford to have runners, take the runners. If you can't afford to have runners, then just take the money. More times than not, most people lose more money trading by just simply not by simply not realizing gains. They'll hold on to their losers forever. Tell me if I'm wrong in the chat. You'll hold on to your losers forever, but if your winner makes like 40, 50, 60, 70, 80% in like 5 minutes, you'll be like, oh, could go to 2,000. I know that's a thing. Hey, I'm human too. I get it. All right, NVIDIA. Let's see if we finish the H here. Again, breaking the low here is what I'm looking for another leg down, and I'll probably go runners on them and kind of enjoy my day. We got 6 minutes left in the show, so the timing would be impeccable. If we can get another red bar like this, Boom, slap a stop off, say la vie. You guys enjoy your day. You made some money with me, and that'll be good. I think everyone will be really happy with that. So I guess I'll do a last minute call. We're rounding out the show here, about 5-6 more minutes. So if you have any chart requests or any specific questions, feel free to drop them in the chat right now. And if we can get to them, we will. You guys saw me do my job as your stock market weatherman, forecasting the day pretty clearly today. It was pretty nice, and I love trading days like this when, A, we're not necessarily in a trend day, which I guess we are kind of trending to the downside. But B, there really wasn't any news to kind of mess things up, and I prefer that. Whenever there's like low news, whenever there's like nothing really going on, there's like one Fed speaker or whatever, and that's about it. Those are the days I love to trade because I can just really hone in on technicals and, again, paint the full picture for you guys, looking at volatility, looking at around the market, looking at, in this case, the Mag 7, to kind of paint a picture of what really is going on. And it makes it much easier to see those opportunities, which I like. Is there a target before low day? Yes. I was looking at right around basically here, which we're almost there. You can use 189. Between 189 to 188.92. That general area right here. And we're just looking at intraday price action. We had a big push up here. You left 2-3 wicks here before pushing higher. So there's some interest at this price area, which we're basically tapping now. So I'm watching this area as a place where I could trim, or watching to see if it falls through, because if it does fall through this area quickly, then we're more than likely going to get another one of these like Marubozu candles. So it's an area that this is what I would call like an area of interest. Not that it's a trigger point or even a take profit point, but it's an area of interest because I could take profit here depending on how technicals are, right? Depending on how the candles look, depending on how volume is, or I would wait to see that follow through happen, see if we get a harder push to the downside, especially with how the 5-minute and the 3-minute are sitting. So right now, like literally right around here, we're at that area of interest. Right now, actually, quite literally. You know what? Just to say I did it, I'll trim some here for you. Just for you, Hatchet. I'll trim some. Because we're getting a little wicky here, you know? It's worth it. All right, trimmed out at 35%. If you haven't already, that stop loss should be at break even. I got typically around one more trim until I'm at like runner size. How many contracts I have left? Yeah. I'll probably trim one more time before I go runner. So that just kind of gives you an idea of my sizing here. At like a third of my normal weight at this point. But to be honest with you guys, a lot of the bulk of my money I make is between 10 to 30%. That's where the lion's share of my money is made, where I'll take 3/4 of my contracts off the table. Omar with a good game, Adam, in at 154, out at 175. Hell yeah, brother. Congrats. Hector says, volume looking like bulls trying, but not much. Yeah, that's exactly what I'm seeing, but that's why I'm saying these wicks here. And because, like I said, this is like an area of interest. This is where, if the bulls were to step in, they would try. The 1 minute's pretty burnt out, but the 3 and the 5 look like we can continue more to the downside. So you're at a little bit of a crossroads here. I could see an argument each way, and when things are like that, I tend to take a trim. So that's why I was a little hesitant on your answer, and that's why I was like, we'll see. And as I was watching in real time, I'm like, okay, I'll take a trim. I'll go one step further, actually. I'll move my stop to 178. There we go. So no matter what, with the remaining contracts I have, that leaves me walking with about 16% gain, which is great. And if it continues to the downside, I capture more downside, right? Where I'd look to go runners, again, breaking this basically where we are right now, especially if we get some level of a Marubozu candle. Right around here-ish. Oh, you could break the green star on the 5-minute. 1, 2, 3, 4, 5, 6, 7 5-minute candles that are red. If I do go runners, I probably would go a little earlier than I'd like to, and it'd be right around here on the 200 MA tap on the 3-minute. But when I'm at runner size, I wouldn't trim again on my runner size until we broke low a day and like went. Like we sold off hard. So that would be like my plan if I went runners at that point. Tom says you trim 3/4 between 10 to 30% gains. Good to know. Yeah, all the time, man. That's like the best rule of thumb for me, because think of it this way. Well, okay, I shouldn't say all the time. There are times where there's like, I guess like with this specific trade, and I should say most of the times that's an applicable rule that I like to do. You know, you may be a little different. But there are times where instead of trimming, I will just move my stop with it. So I might hold, like, let's say right now I have, like I said, I'm like third size of my normal size. If I stayed full size for whatever reason, or like half size or whatever, I would move my stop more aggressively. So that way, like in this case where my stop is, I'm going to lock in 15%. So here, let me look at my notes. So my first alert, I trimmed out at 11. My second one, I trimmed out at 28. So let's say my first alert, if I trimmed out at 11, and I was like super okay with 11%, and then it moved up to that 28% gain, maybe in that case, I just move my stop loss up to the prior area that I already trimmed at, or roughly around that area. That way, I can keep a heavier size on, but keep that stop, moving up with it for more potential. Now, with risk comes reward. So if I didn't trim where I just was talking about trimming for 35%, I could be leaving basically, what's that? Over 100% gain on the table. Well, let me explain. My stop loss right now is set for a total 15% gain on the remaining shares or the remaining contracts. So that means I have what's called opportunity costs. The opportunity cost is the difference between that high trim, which was whatever it was, 208, 207, something like that, and my stop at 178, 9, whatever it is. So between that range is the money I can lose in unrealized profits. So that's something you have to take into account as well. How much you're willing to risk in that scenario. So it's a very nuanced thing, I guess I should say. But most of the time I will trim very aggressively in my first 10 to 30% just to lock in those gains and de-risk myself from the market, right? Especially on day trading. Let me say it specifically. Swing trading is a little different, but specifically with day trading, I want to be de-risked out of the market as quick as possible. Sometimes, you guys know this, if you trade equity especially, how long does it take you to get 10% on equity? Like, okay, if you're trading micro caps or whatever, sure, same day, right? But on normal stocks, like even look at Crocs. Crocs was, when I got in here, and that was also almost a week ago, it's only up like 13%, which is big. Don't only sounds bad, but it's up 13%. But it also took 5 days to get 13%. Like, that's a lot of time. Whereas I made whatever it was, 35% on Nvidia today. You know what I mean? So you got to be able to switch the gears and how you operate, and consequently understand the risk with that as well, and how much of that opportunity cost are you risking. So in this scenario where that stop is, and the difference between the highest point that I trim that contract and where I place the stop, my opportunity cost is, okay, in that scenario, I'm expecting to make whatever. If we go to low a day here, at least, well, here, let's just look in real time, because I said it was like 250, right? 260, right? So I'm risking, theoretically, in this case, my highest trim here was around like 207, right? My stop's at 179. So let me do some math. It's $28. So my risk here is $28, theoretically, of unrealized gains. But the upside in this scenario is an additional $50, $60, right? So now I still have like a 2-to-1, 3-to-1 risk to reward here. And this is just stuff I do like quickly in my head. Now I'm just talking it out for you, so hopefully it helps you. So my opportunity cost here is I'm risking $28 roughly in unrealized gains, but I'm looking to gain 3 times more if the trade works in my favor, or even more, right? It goes to low a day, and I'm just basing this off of today's price action on this contract. It would go to that low a day price, which means I would have roughly $60. Okay, so that's 2-to-1, sorry. I'd have roughly $60, so I'm willing to risk the 28 to make the 60. Hopefully that makes sense. I know it's a little convoluted, but hopefully that makes sense. And you take that, and you take with what the candlesticks are looking like. You look at the volume, you look at the overall market, you look at the 3-minute, the 5-minute, the 1-minute, the 2-minute. It's all big rigmarole until you have a set trade plan, and that's what you trade. Hopefully that helps you, Tom. That is how my mind works in a matter of minutes. And with that being said, I want to close out the stream, but I'm going to wait another minute or two just to see if we broke the low here on Nvidia. I'll just tell you guys the game plan here. Low a day. Like I said, you can move up stop losses if you want to, but I'm really hunting for low a day here, especially with VIX now at 1680 and UVXY at 1061, just as I prophesized with my crystal ball. But we're at the support range on the SPY, so just be mindful of that. Ideally, I think we tap, again, the devil's super number, 6666. Look for a reaction there. If we slip this, we're going even lower. Like I said, volatility has the option, VIX has the ability, I should say, to mark up to 1718, and UVXY has room to push really to 11. So we have a decent opportunity for volatility to break out here. So because of how that's set up and because of where the market is, if the market does break that 66666 level, we could see it slip even more. So this actually could ironically be a trend day just to the downside with how this is set up. I just wouldn't chase things either which way. If you're already exposed to make a trade or whatever, God bless, do your thing like I am. But I wouldn't really sniff around for new trades, especially as volatility continues to expand. That makes it very hard for you to trade. Trust me, you will be less successful when volatility goes up. If you don't believe me, do a journal and write every time what the volatility was every single day and just see how many times you lose versus how many times you win and where volatility is. I bet you on days where volatility spikes, you probably have a bad time. As most people do, just saying. All right, guys, with that being said, that's going to wrap up the show. Thank you guys for sticking around. This was a long one today, almost 2 hours. But hopefully you guys enjoyed the show. You learned something, you made a little money, a little bit of everything here. Not really so many laughs today, but typically we get a good laugh, we get a story or two in there, we look at some charts, you learn something, you make a little money. That's all the best that we love to bring you right here on the Atomcash angle. So I hope you guys enjoyed the rest of your day. And remember, some will say you need an edge to trade. Well, I like to look at things from a different angle, and that's always what you get right here on the Atomcash angle. Have a great rest of your day, guys. Please trade smart, watch volatility, don't make dumb decisions, and remember, precision beats prediction every damn time. I will see you next time.
Time has passed, and that's a wrap. You're on with the